Hi, this is your Mortgage Rate Watch, Election Day, November the 2nd. Not too much to report from the economic news that's coming out. Everything's just based on what's going to happen with the elections. A lot of the reports that are coming out are hedging on the fact that if Republicans will come back into somewhat of control and how much impact that's going to have. The real big news does come for the mortgage world and for all the homeowners out there. Really, it all comes down to tomorrow with how the Federal Reserve is going to act, what's going to be the plan and what's going to be released, what's the purchase plan going to be and what dollar amount. So a lot of questions up in the air. For homeowners, what this really means is if we're looking at interest rates today, everything sounds at this point on how economists are starting to what we call hedge on what's going to happen is going to be short-lived. If it does play out the way that many of the economists had said it would, the amount of money that's going to be put into the market, it's going to help pressure bonds lower, in turn pressure interest rates possibly lower, but it's going to be for the short term. When you're looking at long term, what's going to happen is really put pressure on inflation. Now, when they say short term, we've heard now that this purchase program is going to last until the end of the second quarter of 2011, all the way until the end of 2011, now possibly tipping into 2012. That's kind of what we saw happen with QE1, quantitative easing round 1, in 2009. It started in basically February, and it went all the way until March of 2010. So going forward, it's really difficult to say, and no one can really estimate what's going to happen with rates. But we do want to just put out there the sense of urgency. It all comes down to timing. There's going to be days in this marketplace, especially moving forward, due to the jobs report. Here we're expecting that jobs are going to have a creation of close to 60,000 rather than a loss. If it does come out on this Friday with the better numbers, that does represent now the best numbers that we've seen since July of this year, putting hopefully unemployment on the decline and now stabilizing, and then hopefully now having somewhat of a rebound in the employment area. This is coming from what the analysts are saying from the private sector, meaning the corporate America beginning to hire. Also, the private sector is saying that they really want to know what's going to happen with the elections and how that's going to affect taxation. So, there's a whole mixology that we've been talking about with this that's really impacting everything, and it's all tied together. So, the only thing that we can really say is it comes down to timing. Get your applications in if you're looking to do a refinance. If you're on a purchase right now, we would honestly say past Wednesday, once we get this quantitative easing 2 numbers out, then we'll be able to decipher what's going to happen. One good strategy, again, is to work with the lender like we have in our arsenal to have the float down option, lock your interest rate in, and should the rates go down, you have that one-time float down option. So that's always a great strategy to have, but right now it's just you just don't know how volatilely anything's going to react, and most likely, especially when jobs reports to come out, any type of corporate earnings come out, any type of news from the corporate sector, from the global markets, anything positive, right now, especially with Federal Reserve's inputs, probably going to have a knee-jerk reaction on the market, causing interest rates to either spike or lower, and there's not going to be a happy medium. So again, hang on for a pretty violent ride for the next, I'd say, 48 hours. Any breaking news, we'll make sure to update you on our Twitter page. Make sure to check in often, and we'll be back tomorrow.